GM everyone, I'm Hikaru, and today I'm going to do a lesson on when not to trade on crypto. Now, most traders feel like they need to be inside the market to make money all the time. This often leads to overtrading, which is the number one account killer. So, most of the gains one has comes from less than 10% of the market's price action. So, your job is not to trade often, it is often to just survive, right? To survive the kill zones. So you actually have some capital left whenever the market actually goes long. Okay. So what do you want to filter for? You want to filter for moments like this and this. What do you actually have to do? So there's a lot of ways to just filter moments you don't want to trade, right? You don't want to trade a bear market. One of the first things I would do is actually to just apply a simple moving average. Let me pull it up. So a 200-day moving average is actually just one of the best filters you actually can get for a bull and bear market detection. So it's not going to trade from December 2021 up until January 2023. It even bypasses this, which is nice. So what is it that is going to filter? A simple moving average. Well, this moment, pretty choppy, but around here and there, and even now this period. One of the interesting things that has happened right now is that uh, trend indicators have actually long this period. Let me pull it up. I'm actually uh, pretty confident in my BTC protocol indicator. However, uh, it has fallen to this sort of long signal here that has sort of capitulated here and then continued here and kept its long here, I believe. Let's pull it up. So yeah, we got it's actually neutral, which is keeping the position. However, it's sort of a false signal. So there's sort of this thing that happens in bear markets that trend indicators were just trying to catch this, and this. So obviously, now on hindsight, after seeing what transpired after all of this, you actually obviously you do not want to trade these moments, even though you get a a very slight moment of profit here and maybe here and there. Um, you just want to filter them, right? So essentially, doing a 200-day moving average can actually do the work. Even right now, let's see what the threshold is about 105K, which, interesting enough, let me pull up an indicator called M2 deviation, which is the deviation of this chart with global liquidity. So this is actually going a bit of off script, but this indicator is telling us that the bull market will essentially come back up until 104K, which is very much close enough to the 200-day moving average, which sort of tells us if price essentially tries to reclaim this level. Whatever long signal you get around here, it's going to be faithful. Maybe you're not going to get a false signal, which we indeed are pretty far away from something that might be profitable. Now, another thing you have to take in consideration whenever you're trying to long something is the fact that the whole market follows BTC, right? So you could get a long signal here or here on any altcoin, but that signal is going to be super risky. I mean, let's just uni. Perfect example. So we are completely short throughout this period, but what happened to uni? It did how much is it? 40% candle. It's obviously just a pump that's gonna dump. However, if you just follow technicals here and say, oh well, I probably got a trend following signal from an indicator here, that means it's going to continue pumping. and make money. However, obviously not. This ended up retracing completely and even going even lower than the pump. So that's your filter. You did not have BTC following through with a long signal. Well, an altcoin did. So you have to ignore it. Maybe during this period, which is, a period below a 200-day moving average, which is a bit shaky. It may follow through or probably not. However, it's just a, a sort of filter you can go through. Even the analyst log here says holding pattern, reserve capital and wait for a conviction shift, right? Because BTC Gold is short, which is another sort of filter you can apply to your long signals. Like, is this long? This whole ratio. I think I have a template here for that. BTC Gold. Okay, so if you add a long signal on BTC Gold, then that's a very I wouldn't say profitable, but it's a more likelihood of success. And right now we haven't been long since August, more than 150 days. So let's go back to BTC, and essentially we got to not to trade below a 200-day moving average, not to trade whenever BTC is short in it of itself. However, you can apply another type of filter to take on more risk, which is actually something I'm doing right now, which is to grab this BTC trend indicator and apply it to the long term, which I use it on the 3-day. So essentially, you're going to be short during this period, or not short, but you're going to be in cash or not engaging at all. You got the same here, the same here, and there, and there. Uh, this period, which is pretty bad for trend following indicators, it just bypass on the long term, along with this and this. So that's pretty much a sort of signal of you can trade around these areas, but it's not going to be profitable systemized trades. You're actually just better off with this sort of uh, long and take profit sort of long positions that are not systemized at all. So right now we are short, and even the system is telling us that the market is coiling, and we have to step aside, which I agree. It's treacherous. One more thing you could filter for is the forward macro. Now, this is very much something that it's an aggregation of a lot of DXY and Euro. There's this element that whenever the sort of DXY, the dollar index, is going up, that means that risk assets are going to suffer. And that happens usually within a sort of offset of from 0 days all the way to 90 days or 120 days or something. What happens usually is that the strength of the dollar sort of impacts the markets 3 months later or something like that. Sort of it changes, but it's sort of a frame you can follow. Right now, around end of February, sort of mid to end of February, we got some good macro, which I do believe we could up and do whatever here or just go up. But March is going to be very much a good month if the macro just sort of continues to go green here or favorable. Uh, so if you sort of got a long-term moment, however, you're sort of ending bad macro and you're walking into good macro here, that's a an indication that you got some alpha to maybe go and try to go long whenever uh, sort of everything after this period has a long signal. Which on the 1 day time frame, you got a long around this area. So you can either trust the macro, go long term, or follow BTC's trend. There's a lot of filters you can go through. You can even create your own alpha, right? So you can indeed just apply, a trend indicator like BTC protocol, which is sort of my favorite go-to to filter BTC's trend, and maybe apply that simple moving average on the 200-day moving average, simple moving average, and go, okay, we might have a long signal here, but how's the macro? Are we below a 200-day moving average? Or maybe if you want to trade any altcoin like, I don't know, PayPay. What's going on with PayPay? Maybe, well, you get a lot here. Let me find a better moment. Maybe here you go, all right, we got a long signal, but how's Bitcoin? Is it long? It's long. You have permission to trade. Maybe that's your criteria. There's a lot of things to build. Um, there's no one rule set. And whenever you get one pretty good rule set, it might just change. So you have to be very dynamic, sorry. Um, you cannot just rely on one simple rule set forever. However, just the rules I talked to you here are very much applicable, sort of universal traits. Even here, right? It works during this whole period. What is this? 2028. So we're short here. We got a long. We're below the moving average. We filter this one too, and you sort of get, of course, some pain from not following trend following signals. Whenever we actually cross the 200-day moving average, that's where you take into consideration macro uh, or the long term, right? So there's so much you can do. And that's my lesson for today. When not to trade Bitcoin, or not to trade uh, altcoins, and there's a lot more you can build yourself. Maybe even you could try to do the same for the S&P 500. Let's see. Actually, I'm not sure. Let's test it out. Well, the S&P is just sort of a mean reverting trending market. I mean, it's just sort of trends, and your buying opportunities are sort of below this trend. I don't think you can sort of extrapolate risk from the S&P 500. You get false signals and a lot of noise here. The 200-day moving average is something quite cool for crypto, as sort of locking your long signals. However, you just have to try, right? It didn't work here. Maybe it works somewhere else. Uh, you can even try and track what is the trend of BTC Gold, which is sort of a fiat debasement sort of ticker, right? How's this doing? Let's apply a universal protocol and figure it out. Okay. So if you're in a moment where you actually think you got macro in on your side, and you're really grasping for a long condition, uh, this might just do it. This is actually pretty nice as a sort of risk taker. I mean, gold is sort of risk off. However, it responds positively to global liquidity, like Bitcoin does. So this is a pretty nice ticker if you're just sort of experimenting. Like, right, we got BTC short, but it may go long. Macro is on our side, and how's BTC Gold doing? So this is pretty good. Actually, following through with BTC and Gold at the same time is sort of better than just doing BTC. So there's just one more sort of drop in the bucket to see what the hell to do in the market. Uh, and the signals aren't bad at all. you'll get some of that bear market fake long conditions here and there. However, it's not bad at all. And with that being said, if you got any questions, I'd be happy to respond. And that being said, GM.